you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite low.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, you guys. And I just wrapped up Sacramento, and as I was leaving on my way to Bakersfield, I think I'm going to make a quick video on Bakersfield and then to Vegas, Phoenix, El Paso, Austin. But I just left Johnny's house. Johnny, big shout out to you, man. Thank you for all the love. Just left his house, you guys. I actually got good sleep, ate good food, but look at all of this new construction that's just right down the road from him. I mean, it's absolutely shocking. So today's video is gonna be about the unrealized losses right now that big banks have. It is an astonishing amount of losses. And what will happen, guys, if these banks start going under, you're gonna have a credit tightening event that is gonna cripple so many companies and so many people. So we're gonna talk about what effects that's going to have on the commercial aspect of the commercial aspect of real estate, residential aspect of real estate, what it means to consumers. Because if banks start to go under because of unrealized losses, it's going to be a domino effect in everything that you see around me. All of this building will absolutely stop. And you guys, real quick, just to give you guys a little bit of a bone, Reno blew my mind, okay? And Sacramento, the place that I went to in Sacramento, you guys, it's the biggest subdivision I have ever been to in my life. It is massive, guys. They're building like crazy out here. I mean, look at where I'm at. I mean, just right outside of his house. So anyways, I hope you like this video. Say some prayers for my journey, but I'm about headed to Bakersfield right now. And again, you guys, if you can, don't forget, like this video, subscribe if you haven't already, shoot me a comment below, and I hope you guys enjoy. I'm at a location right now. I think it's around Stockton. You guys can see behind me, look at all the fog. I mean, you can hardly see past that pump right there. And the reason I'm saying that, guys, is the housing market right now is a lot like fog. We really don't have the view of the full picture. And the reason I'm saying that specifically right now is the 10-year treasury is dropping. Obviously, we talk about that because that's also going to drop mortgage rates. And a lot of people are like, oh, the 10-year is going to drop, the buying demand is going to come back, and things of that nature. When the reality is, if the 10-year is dropping right now, that means the market is purchasing the long end of the yields, which means, in my opinion, that the market is starting to see the recession coming. And if we look at the fact that the inversion of the 10-year and the 2-year is getting worse, again, you guys, to me, that's signaling the market is starting to price in the recession. And maybe one of the reasons is because of all of these unrealized losses and all of the commercial mortgage-backed securities that need to be refinanced. Either way, you guys, I thought the fog behind me made it a good intro. Now, here's the name of the article that we're going to read. This is from Wolf Street, and guys, some of this stuff is absolutely insane. The name of this article is Unrealized Losses on Securities Held by Banks Jump by 22% to $684 billion in Q3. Oh lordy. So again, I think that the 10-year is plummeting like it is right now because the market is starting to understand the turmoil. Now the thing is what does that mean for us? The guys, here's the fact of the matter. If there's someone on the sideline that wants to buy a house and interest rates say go to 4%, it doesn't matter if they don't have their job or if they didn't save or if they're not prepared. And honestly, guys, if these banks start going out of business, we will see additional credit tightening. You may be able to get a house right now at a 580 credit score, but if these banks start going out of business and any type of regulation comes down, like in 2009, Dodd-Frank Wall Street Reform and Consumer Protection Act, lending and credit restrictions can completely change. So I think this is going to be a really good article to really get a better perspective on what's going on behind the scenes as far as turmoil. So I got to another gas station where it's a little bit more clear out, and I wanted to bring up another point. It also is possible that the market is getting it wrong by buying the long end of the yield, because if the market doesn't expect us to go into recession, that could be a pretty major mistake, because if we don't go into recession, more than likely, not necessarily 100%, inflation will go up. So it's actually quite possible that all we see right now with the 10-year is just it being volatile and a zigzag pattern. So, you know, another option again, you guys, is just the market got it wrong. There's just still so much going on right now. And again, I also want to point out that, you know, without recession, without unemployment, house prices are already going down, transactions are crashing, new home prices are crashing. Essentially what a recession will do is it will cause the housing market to tailspin. It will cause the housing market to tailspin. So again, even without a recession, more than likely at the best case scenario for the housing market is it goes sideways with a slight decline for maybe 7-10 years as wages keep up. Because remember, the fundamentals is income, median income versus the price of houses. So it's fair to say, you know, if we don't go into recession, house prices are going to either be down or sideways for quite some time. If we do go into recession, it is going to be a catastrophe. And the market is literally all over the place. So let me read a little bit of this right now. Unrealized losses. And again, the reason I want to point out unrealized losses is because we haven't really seen credit tightening absent car loans, subprime car loans, which is a small fraction of the credit. So we really haven't seen the credit tightening. That's another thing. If we do have credit tightening, tailspin as well. But unrealized losses on securities, mostly treasury securities and government guaranteed MBSs at FDIC insured commercial banks at the end of Q3 jumped by 126 billion or 22% from the prior quarter to 684 billion. According to the FDIC's quarterly bank data release on Wednesday, these unrealized losses were spread over two accounting methods. Unrealized losses on held to maturity securities jumped by 81 billion from the prior quarter to a whopping 391 billion. So again, you can't disregard the headwinds, right? I'm a little bit surprised of the resilience and the timing and things like that, but we cannot disregard headwinds. Now, the second thing, unrealized losses on available for sale or AFS securities jumped by 45 billion from the prior quarter to 293 billion. Almost to Bakersfield, about 30 miles out. I stopped at this Flying J right here, took about a 20-minute crash nap. I am so exhausted. I'm on 3,300 miles traveled and 74 hours driven. Some of you guys that have been watching me know that I'm traveling around the nation to report back on new construction. And I'm going to give you a special bonus, like I said, in Bakersfield. I'm about to show you how much, you know, the price cuts are. But going back into the article, their paper losses occur periodically when interest rates rise. As yields rose in Q3, the market prices of those bonds fell, and the unrealized losses stacked up. For example, the 10-year Treasury yield jumped from 3.81% at the beginning of Q3 all the way to 4.59% at the end of Q3. In periods when yields fell and bond prices rose, banks had unrealized gains. And you can see this chart right here, you guys, back from about, 2019 to the end of 2022. So you have those gains there, but look at what happened, you guys, into 2022. I mean, we're talking about unrealized losses that are just like nothing we have ever seen, far, far exceeding the great financial crisis. So it's fair to say that the headwinds and cross currents right now in the banking sector, specifically when it comes to the unrealized losses, is far unimaginably worse than the great financial crisis. So we have different types of headwinds, different type of turmoil right now. And it's actually really, really surprising, really astonishing. And what's interesting is this Flying J, they have a Starbucks being built right there. You see that Starbucks? And then over there is also some more office buildings. So these, so we really don't have the credit restriction yet like we need. We're about half an hour from the subdivision I want to show you as far as new construction. Let's pack this up and let's head that way. Alrighty guys, I just got here. I want to throw up some stats real quick about Bakersfield. So there's a little cluster in Bakersfield right there. Now, when I click on list right here, it's going to give me a list of houses and the price cuts as well. And you guys can see some pretty hefty price cuts. You see that right there? So that one has a $64,000 price cut right there. So again, the house right behind me, I'm going to walk this real quick, guys, with you. Oh my gosh, I'm so tired, man. Alrighty, so take a look here. Again, over 10% price cut right here. And I want to point out, always want to point out that, remember, with new construction, especially with Lennar, the interest rates have already gone down. So we already have 4 or 5%, even 6% interest rates with new home construction, but they're still not able to hold their value, and inventory continues to go up. And also, that map really doesn't do any justice to how much inventory is actually here. That's why, the boots on the ground is, in my opinion, is just really so important, because in this community they had about 5 houses that were on the market, and when I get here there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 houses behind me. Look at that. It just, we don't have all of the information. There's way more inventory. Again, you guys, that's even being reported. So I'm just gonna do, you know, kind of a little walkthrough right there. I mean, you guys saw the map yourself. So, you know, one of the reasons why I'm showing you how I'm doing this is so that you guys can do it as well. New home source, MLS, census data is not giving us the true picture of what's really going on with new home construction. And again, Bakersfield, you know, I don't even know how it got propped up as much as it did. If you guys know where Bakersfield is, it's literally in the middle of nowhere. But, you know, and I passed several subdivisions as well on the way here that had, you know, I don't know, probably another 20 spec homes. This is absolutely insane, you guys. And again, if you already purchased in here and then your neighbor, again, right where I just passed, okay? If your neighbor right there just got a price cut of $64,000, how's that gonna make you feel? And remember what I'm always saying, you guys, the more spec homes in the subdivision, the more likely it is for you to get a great deal. Check this out, I'm still in Bakersfield. I mean, Bakersfield is full, it looks like, of agriculture. Not sure what all of this is right here, but I'm pretty sure if you're working here, you're probably not gonna be able to afford a house. There lies the problem. And you may be asking, you know, I'm already doing 10 metro areas. Why did I stop to do Bakersfield and add an 11th metro area? And I'm gonna tell you guys real quick, okay? The reason why I stopped in Bakersfield is because every fiber of my being, every emotion in my body is telling me to quit, is telling me to give up, it's telling me the pain's not worth it. All of this isn't worth it. Go home to your family. What you did was a mistake. And I'm taking all of those feelings and I'm showing myself that my goals and my approach is stronger than what I feel. I'm taking all of that, you guys, all of those feelings, and I'm excelling with it, okay? And it hurts and it is painful, but it has never been more important to stick to your goals. And I hope you guys can see that that's exactly what I'm doing. I'm trying to show you guys, okay? It's hard right now. I'm with you with all of this, but we got to have goals, and our goals will shape our approach even when we're emotionally distraught. So remember that, guys. Let's get back into the article and finish this out. Unrealized losses on securities held by banks don't matter because a maturity in 7 or 10 or 25 years, banks will be paid face value, and the losses are only temporary, so to speak. They don't matter until they suddenly do. And bank regulations don't have to mark their securities to market value, but can carry them at purchase price. The difference between market value and purchase price is the unrealized gain or loss that the bank must disclose in its quarterly financial filings, so that we, the depositors, can see them and get spooked by them and yank our money out. Us billionaires and centimillionaires first on the two fundamental principles of investing. Number one, he who panics first panics best. And number two, after us, the deluge. Okay, guys, I'm back on my way to Las Vegas, and I had to stop at a Flying J's. Basically, at this point, any rest stop or any truck stop, I'm gonna pull over and basically sleep for 20 minutes. And I'm gonna show you guys where I'm at, because there's the scenery is much different than I've showed you guys so far. But let me read a little bit more of this article. And thanks to today's electronic fund transfers, the bank that we yank our money out collapses at lightning speed. See Silicon Valley Bank, Signature Bank, and First Republic. And that's exactly what happened this year. The accumulated unrealized losses of $684 billion were not a record, but were still $6 billion lower than the record in Q3 of 2022. Because the FDIC took over 3 regional banks earlier this year and sold their assets, including their securities, at something close to market value, and thereby ate those paper losses. Actually, didn't the taxpayers eat those losses at the expense of what? Inflation and the cost to live and things like that? For example, SVP, in its 10K filing with SEC for 2022, in a footnote on page 125, disclosed unrealized losses of $15.2 billion in HTM securities and $2.5 billion on AFS securities, for a total of a whopping $17.7 billion. Those losses vanished from the banking system when the FDIC took over SVB. The 3 collapsed banks' unrealized losses were taken out of the banking system in Q1 and Q2, which is why Q3 of 2023 wasn't a huge all-time record, but it's certainly super scary. Real quick, and show you the foothills that I'm at. This is, man, I'm struggling, you guys. I'm absolutely struggling. There's literally no one that can help me at this point except God. Man, this is all grit. You guys see where I'm at? See all the foothills? You know, pretty cool stuff. Johnny was texting me and like, man, you're driving around the country making videos, you're living the dream. And I'm gonna tell you, Johnny, this is not my dream. I just want to provide awareness and value and basically explain to people that we need to pay attention to what's going on in new construction if we're to understand what's going to happen in existing. And again, one of the factors of the housing market collapse will definitely be a banking crisis. Finally got to Vegas. Well, basically got to Vegas. I stopped short, slightly short. I'm at Buffalo Bills. See that? Look at the parking lot. Look at this. Okay, all right. Almost nobody in this casino, so they're suffering. I'm gonna get back up to the room and finish out the article, but I wanted to let you guys know. I stopped short of Vegas because this is a lot cheaper. It's only $85 a night. I already went in there. There's no one in there, and everyone that's in there looks extremely depressed, like they lost a bunch of money, or rather they used their last of their credit card debt that they were going to put their rent payment or mortgage payment on, and they lost it all. That's the feeling and sense that I got in there. But again, thank God, that was freaking brutal. But let me get back up to the room and we'll finish out the article. Okay, so I got to the room, passed out, woke up at 5 a.m., got some breakfast, drank 5 glasses of water, came back to the room and passed out again. Woke up with a huge migraine, you guys, but took some ibuprofen. Want to finish out this article right now. Take a look at the graph as far as total securities at commercial banks, okay? So obviously that almost peaked probably what, close to 6.4 trillion. You guys can see that's down. Now that's one of the reasons why these commercial banks are getting absolutely wrecked. A lot of those securities that they purchased, the trillions of dollars of securities, were at the very low interest rates. So now that interest rates are higher, essentially those securities are no longer worth what they were. They have to wait until they mature to basically reinvest them. If they sell those securities, like depositors want their money out of the banks, if they sell those securities, they sell them at a loss. And that's a reason why we saw so many bank runs. So anyways, guys, that's going to conclude this video. I definitely think we're on absolutely shaky ground right now. I think if you're out there trying to purchase, anything big right now, caution is a must. Now, if you're filthy rich, right, and you purchase a house and your PE ratio is 1 and your payment to income ratio is 10, well, then you're in a much different situation than most of us. Understand, you guys, I'm specifically talking to, the 90% of people at the bottom like myself. So anyways, I really hope you found this video valuable. I'm kind of doing a vlog style reporting as I make my way through the trip. So what I'm going to do tomorrow, I'm going to be touring Las Vegas, then I'm going to Phoenix, and then El Paso, and then Austin, and then home. And I really appreciate you guys following along. I'll start editing when I get back home because I want to add certain things on my boots on the ground reports, like area price cuts. I want to show you guys a map of the entire area as far as new construction and price cuts. And I also want to show you guys a map of foreclosures. And I can really only do that once I get back to my studio. So please, you guys, do me a favor, stay patient and like this video, shoot me some comments below. And if you're out there investing in real estate, I wish you luck and I hope you win.